All right, so you sent over a ton of info on Disney, stock analysis, financials, all that. It's a lot to unpack.
It is.
But that's what we do here on the deep dive, right? We break it all down and we see what's really going on with the House of Mouse in this case.
I think what's interesting about this deep dive is that it's not just for investors. Like, if you own Disney stock, great. But even if you're just a fan of their movies,
Right?
this is about understanding how this cultural behemoth works, the forces that play, and what it all means for the entertainment that we all consume.
Exactly. We'll dig into that recent analysis that you sent, but um, our mission is to pull out the interesting nugget for you, the stuff that matters, even if you don't speak Wall Street.
Yeah,
Ready to go beyond the theme parks and movies?
absolutely.
I think so.
Disney is way more than Mickey Mouse ears and fairy tales. It's a global media empire, and we're going to explore the inner workings of this complex machine.
Okay, let's dive right into the money, shall we? Disney pulled in a staggering $92.5 billion in revenue recently. I mean,
That's a lot.
that's enough to buy a small country,
Yeah, a lot of Mickey Mouse pretzels.
or a lot of Mickey Mouse Pretz.
That's right. And that revenue comes from a surprisingly diverse portfolio. They're not just relying on one source of income. It's split between
Right.
theme parks, their traditional media networks, and of course, the world of streaming.
So they're not putting all their eggs in one basket, which is probably a smart move these days.
Yeah.
So let's break down each of those revenue streams, starting with the theme parks. After that pandemic slump, it seems like everyone's itching to get back to those magical lands.
You hit the nail on the head. Theme parks are roaring back to life, which tells us people are craving those real-world experiences.
Yeah.
And for Disney, that translates into big bucks.
So that pent-up demand is filling up Disney's coffers. But what about their traditional media networks, like ABC and ESPN?
Right.
Are those dinosaurs still bringing in the cash?
Well, they are facing the dreaded cord-cutting phenomenon.
Oh, yeah.
That's industry jargon for people ditching their cable subscriptions in favor of streaming services.
Yeah, cable bills are no joke these days. So how is Disney holding up in this evolving media landscape?
It's a bit of a tug of war. The old school media networks are still bringing in revenue from advertising and those hefty cable fees.
Right.
But the growth engine for Disney is definitely in the streaming world.
That brings us to the third revenue stream, direct-to-consumer, aka the Wild West of streaming.
That's right.
Disney Pluses, Hulu, ESPN Pluses, all vying for our attention and subscription dollars.
All of them.
Is Disney winning this war?
That's the million-dollar question, isn't it? They've made a big splash with Disney Plus, but the landscape is incredibly competitive.
Yeah.
To understand how they're really doing, we need to go beyond revenue and look at profitability.
Okay, this is where it gets interesting for me because pulling in billions is one thing. But what matters is how much of that actually turns into profit. So spill the tea, how profitable is Disney?
Here's the reality check. While Disney is profitable, their profit margin is a little silly than you might expect, hovering around 6%.
6%.
Yeah,
That doesn't seem like a lot for a company that practically prints money.
right.
Why is the margin so slim?
I remember those streaming wars we talked about?
Oh, right.
Those are expensive battles to fight. Creating all that original content for Disney Plus costs a fortune.
Makes sense.
And they're shelling out big bucks for sports rights on ESPN.
So they're spending a ton of money just to stay in the game. Makes you wonder if those streaming subscriptions are really sustainable in the long run.
It does.
Are they pricing themselves out of the market?
That's a great question, and one that investors are grappling with. But let's not forget that Disney has some serious profit centers, particularly their theme parks.
True.
They're also getting smarter about controlling costs in other areas of the business.
So it's a balancing act, investing in the future while keeping a close eye on the bottom line. Even a giant like Disney has to be careful with its cash.
Right.
Speaking of investors, how is all of this affecting Disney's stock performance? Are people bullish on the mouse?
Well, that's where investor sentiment comes in. Think of it like the mood of the market. And right now, investors are a bit nervous. Disney stock has been pretty flat over the past year, bouncing around without any significant gains.
So not exactly the fairy tale ending that investors were hoping for. Why the lack of magic in the stock market? What's making investors hesitate?
A few things. First, there's the question of subscriber growth. Are enough people signing up for Disney Plus now? The competition is fierce, and investors want to see Disney pulling ahead of the pack.
It feels like everyone and their grandma has a streaming service these days.
I know.
So staying ahead of the curve is crucial.
Exactly. And then there's ESPN. There are whispers about Disney potentially spinning off ESPN.
Spinning off ESPN.
Yeah.
That's interesting. Why do they do that?
It's a strategic move with several potential benefits. First, it would allow ESPN to focus solely on sports broadcasting, giving them more freedom and flexibility to operate independently.
So ESPN could be more agile and responsive to the rapidly changing sports media landscape.
Precisely. Second, a spin-off could unlock value for Disney shareholders. A standalone ESPN could attract investors specifically interested in the sports market.
So it's like saying, hey, ESPN is a powerhouse on its own. Let's let it shine and see what it can do. But wouldn't Disney be giving up a significant source of revenue by letting ESPN go?
That's the trade-off, and it's a big one. They'd be sacrificing short-term revenue for the potential of long-term growth and value.
It's a risky bet, especially in this unpredictable media landscape.
Absolutely. And it's not just about the money. Spinning off ESPN would signal a major shift for Disney, essentially saying they're moving away from traditional media and doubling down on streaming.
That's a bold move, considering the fierce competition in the streaming arena. So there's a lot of uncertainty surrounding ESPN's future. What else is giving investors pause?
Well, there's the big elephant in the room, the overall economy.
Oh, yeah.
Inflation, rising interest rates, those macroeconomic factors can spook investors, especially when a company carries a substantial amount of debt.
Speaking of debt, how much debt does Disney actually have?
Their net debt currently stands at a whopping $39.8 billion.
Wow, that's a lot of zeros. But I guess it's not surprising for a company of Disney's size and scope. They have a lot of investments and acquisitions under their belt.
That's true.
True.
But it's something investors are keeping a close eye on, especially with interest rates on the rise. Higher interest rates mean higher borrowing costs for Disney, which can eat into their profits.
So it sounds like there's a lot of uncertainty swirling around Disney, the streaming wars, the ESPN dilemma, the economy. It's a lot for investors to digest.
It certainly is, but let's not forget Disney is a survivor. They've weathered storms before,
Right.
and they have some serious strengths that we haven't even touched on yet.
Okay, so let's shift gears and talk about those strengths. What's working in Disney's favor? What gives them an edge in this ever-changing media landscape?
Well, for starters, they own some of the most valuable and beloved franchises on the planet.
Uh-huh.
Marvel, Star Wars, Pixar,
Come on.
and of course the classic Disney characters. That's a treasure trove of intellectual property.
You're right. Those franchises are like gold mines.
They are.
Generating revenue from movies, merchandise, theme parks.
Absolutely.
And now streaming. It's a built-in advantage that few companies can match.
Exactly. And those iconic characters and stories have a timeless quality. They transcend generations, appealing to both kids and adults, which gives Disney a level of staying power in a fickle market.
It's like they have a direct line to our childhood dreams and fantasies. But beyond the IP, what else is working in Disney's favor?
Their theme parks business is still a powerhouse. People are willing to pay a premium to experience the magic of Disney firsthand.
Right.
And that's a revenue stream that's less susceptible to the whims of the media market.
So even with all the challenges in the streaming world, those parks provide a level of stability and consistent income.
They do, and let's not forget that Disney is a master of diversification. They're not just a movie studio or a theme park operator.
Right.
They have multiple ways to make money, which helps to mitigate risk in uncertain times.
So they have a lot of irons in the fire, which is a smart strategy in today's volatile world. But all that said, what's the overall outlook for Disney? What do the analysts predict?
The analysis suggests that Disney's earnings will improve in the coming years,
Okay.
but they're closely monitoring those Disney Plus subscriber numbers. That's the key metric that everyone's watching.
It's all about the eyeballs in the streaming game. The more subscribers, the more power Disney has in those content negotiations and licensing deals.
Precisely, and they need to keep those subscriber numbers growing if they want to stay ahead of the competition. It's a constant race to acquire and retain viewers.
So it's a fascinating time for Disney. They're at a crossroads, facing a rapidly evolving media landscape. But they also have these incredible assets and a legacy of success.
It is.
It's going to be interesting to see how they navigate these uncharted waters.
Absolutely. They have the potential to shape the future of entertainment, but they need to be strategic, innovative, and adaptable to thrive in this new world.
Well said. So we've covered a lot of ground here, the financials, the challenges, the opportunities.
I have.
But this deep dive wouldn't be complete without exploring something that goes beyond balance sheets and stock prices.
Right.
You're talking about the magic of Disney storytelling, right? The thing that truly sets them apart.
I am.
Exactly. Because while the numbers are important, it's the stories that capture our hearts and imaginations. Let's dive into that world, shall we?
Let's do it. Let's explore the enduring legacy of Disney and how they're shaping the future of storytelling. So we were just discussing Disney's strengths, their iconic franchises, theme parks, and diversification. But now, let's talk about one of their biggest challenges, the intensely competitive streaming landscape.
Okay.
Specifically, how is Disney Plus really performing?
You've hit the nail on the head. Disney Plus is where they're battling giants like Netflix and Amazon.
Right.
They've seen some impressive subscriber growth since launch, but the analysis that you sent over suggests that growth has been slowing down.
Yeah.
Why is that?
Well, that's the question that has investors worried.
Yeah,
You see, the initial excitement of a new streaming service wears off eventually.
right.
To keep subscribers engaged and coming back for more, you need a constant stream of fresh, must-see content.
That makes sense. You can't just rest on your laurels with a library of classics.
Right.
So how is Disney approaching this content challenge? Are they just throwing money at the problem?
Well, they are investing heavily in original programming for Disney Plus, that's for sure. And they're strategically leveraging those powerhouse franchises we talked about,
Right.
Marvel, Star Wars, Pixar, to attract subscribers.
It seems like a smart move to tap into those existing fan bases. Give the people what they want, more Baby Yoda, more superheroes, more adventures in a galaxy far, far away.
Exactly. But here's the catch. Producing high-quality content is incredibly expensive.
Oh, yeah.
Especially with all the competition in the streaming space.
Yeah.
Everyone is trying to outdo each other with bigger budgets and splashier productions.
So it's a high-stakes gamble. They're pouring money into Disney Plus, hoping those subscription fees will eventually outweigh the massive production costs.
It is.
What are some of the financial risks they're facing?
Well, for one thing, the cost of acquiring new subscribers is going up.
Makes sense.
Think about all those marketing campaigns and promotions they're running.
Yeah.
Plus, they're constantly having to create new content to keep people from canceling their subscriptions.
Like a treadmill they can't get off. They have to keep running just to stay in place. But hasn't Disney always been a company that's willing to take risks?
Right.
They revolutionized animation, built a global theme park empire, and made some savvy acquisitions over the years.
You're absolutely right. Disney has a track record of innovation and bold moves, but the streaming landscape is unlike anything they've faced before. It's incredibly dynamic, the technology is constantly evolving, and consumer habits are shifting rapidly.
So how can Disney replicate those past successes in this new world? How do they stand out in a sea of streaming services?
They're focusing on a few key strategies. First, they're doubling down on original content that expands on their popular franchises.
Okay.
Shows like The Mandalorian and WandaVision have been massive hits for Disney Plus,
I've heard of those.
attracting new subscribers and generating buzz.
It's like they're taking those beloved characters and stories and giving them new life in the streaming world. But they can't just rely on existing IP, can they?
You're right. They also need to develop new franchises and original ideas that capture the imagination of viewers.
All right.
And they're experimenting with different formats, documentaries, reality shows, even live theater productions to diversify their offerings and appeal to a broader audience.
It sounds like they're casting a wide net, trying to figure out what resonates with viewers and what sticks.
Yeah.
But with so much content out there, how do they make sure their shows actually get seen?
That's where data comes in.
Oh, yeah.
Disney is leveraging its vast resources to analyze viewing habits, track engagement, and understand what audiences are craving. They're using that data and inform their content decisions and marketing strategies.
So it's not just about throwing money at the problem.
Right.
It's about being smart and strategic.
Exactly.
They're using data to make informed decisions about what to create and how to promote it.
It's a data-driven approach to content creation and distribution.
I like it.
But even with the best data in the world, success in the streaming world ultimately comes down to one thing: the quality of the content.
You're right. People will only subscribe to a service if it offers shows and movies they actually want to watch.
Exactly.
So how is Disney ensuring that their content is top-notch?
They're attracting top talent, writers, directors, actors, and giving them the creative freedom to tell compelling stories.
Yeah.
They're also investing in cutting-edge technology to produce visually stunning and immersive experiences.
So they're combining the magic of Disney storytelling with the latest technological advancements to create something truly special.
Right.
It sounds like they're pulling out all the stops to make Disney Plus a major player in the streaming wars.
They are, but let's not forget about the other elephant in the room, ESPN.
Right.
Remember those rumors about a possible spin-off?
Right.
That situation adds another layer of complexity to Disney's media strategy.
Right. We touched on that earlier, but let's dive a little deeper. Why is ESPN such a hot topic for Disney right now?
Well, ESPN has been a cash cow for Disney for decades, dominating the world of sports broadcasting. But its future is uncertain in this age of cord cutting.
I see.
As more people ditch their cable subscriptions, ESPN is losing viewers and ad revenue.
It makes sense. People are finding other ways to get their sports fix these days.
Right.
whether it's through streaming services, social media, or online sports news sites.
Exactly. And that's putting pressure on Disney to rethink ESPN's role in their media empire. The question is, do they try to save the traditional ESPN model, or do they embrace a more radical transformation?
So what are their options? What are the pros and cons of spinning off ESPN into a separate company?
Well, a spin-off would allow ESPN to focus exclusively on its core business,
Uh-huh.
sports, without being tied to Disney's broader entertainment ventures.
Okay.
It could give them the agility to adapt more quickly to the changing media landscape.
So ESPN would have more freedom to innovate and experiment with new formats and distribution channels. It could be a way to revitalize the brand and reach a new generation of sports fans.
Precisely. And from a financial perspective, a standalone ESPN could potentially attract investors who are specifically interested in the sports media market.
Okay.
It could unlock value that might not be fully realized as part of the larger Disney conglomerate.
So it's a way to create a more focused and streamlined business, which could be appealing to investors. But wouldn't Disney be giving up a significant source of revenue by letting ESPN go?
That's the big trade-off, and it's one that Disney executives are carefully considering.
Right.
ESPN is still a profitable business, even with the decline in cable subscribers. Spinning it off would mean sacrificing that revenue stream in the short term.
It's a gamble, for sure. They'd be betting that a standalone ESPN could generate even more revenue in the long run by attracting new investors and adapting more quickly to the evolving sports media landscape.
Exactly. And it's not just a financial decision. Spinning off ESPN would signal a major strategic shift for Disney,
Right.
essentially saying they're moving away from traditional media and doubling down on streaming and digital entertainment.
It would be a bold move, but it's one that could pay off if they execute it well. So there's a lot riding on this decision. What are some of the key factors that Disney is considering?
They're looking at the long-term growth potential of both ESPN and Disney Pluses, as well as the overall media landscape.
Okay.
They're also weighing the financial implications, the impact on their brand and relationships, and the potential disruption to their workforce.
It's a complex decision with a lot of moving parts.
It is.
What do you think is the most likely outcome? Will they spin off ESPN or keep it under the Disney umbrella?
It's hard to say for sure, but the analysis suggests that a spin-off is becoming increasingly likely.
Okay.
Disney seems to be leaning in that direction, and there's growing support for the idea among investors and analysts.
So it's a situation to watch closely.
It is.
The fate of ESPN could have a ripple effect throughout the media industry.
It could.
It's a reminder of how quickly things are changing in the world of entertainment.
Absolutely, and it highlights the challenges and opportunities that Disney is facing as it tries to navigate this new media landscape. They're making strategic decisions that will shape the future of the company for years to come.
So we've talked about Disney's streaming strategy and the ESPN dilemma, but this deep dive wouldn't be complete without exploring something that goes beyond balance sheets and stock prices, something that's at the heart of what makes Disney so unique.
You're talking about the magic of Disney storytelling, right? The thing that truly sets them apart from all the other media giants.
Exactly, because while the numbers are important, it's the stories that capture our hearts and imaginations.
Right.
It's the characters we love, the worlds they inhabit, and the emotions they evoke that create a lasting connection with audiences.
That's right. Disney has a legacy of creating timeless stories that transcend generations and cultures.
Yeah.
They understand the power of storytelling to connect with people on a deep emotional level.
Right.
And that's something that can't be replicated by algorithms or data analysis.
So let's dive into that world, shall we? Let's explore the enduring legacy of Disney storytelling and how they're shaping the future of entertainment.
Let's do it. Let's go behind the scenes and see how the magic is made.
So we've analyzed Disney's financials and explored their strategic challenges. We even pondered the fate of ESPN.
We did.
But now let's talk about the heart and soul of Disney, right?
Yeah.
Their incredible storytelling legacy.
This is where the real magic happens, because while balance sheets and stock prices matter,
Right.
it's the stories that truly resonate with audiences.
Yeah.
Disney has been a master of storytelling for almost a century, creating characters and worlds that capture our imaginations
Right.
and stay with us long after the credits roll.
Exactly. Think about those iconic characters, unforgettable songs,
Oh, yeah.
and timeless tales. It's like they've tapped into this universal language that speaks to us on a deep emotional level.
That's a great way to put it.
Yeah,
Disney's stories transcend cultures and generations.
they do.
Whether you grew up watching Snow White or Moana,
Right.
those films evoke powerful emotions.
Yeah.
Wonder, joy, hope, maybe even a touch of fear.
You know, you're right. I still remember being completely terrified of Cruella de Vil as a kid,
Yeah.
but also strangely fascinated by her.
That's the brilliance of Disney storytelling.
Yeah,
They create characters that are both relatable and larger than life.
they do.
Heroes you root for, villains you love to hate, and sidekicks that steal the show.
Right.
And they do it with music, animation, and a touch of whimsy that's uniquely Disney.
It's a formula that's worked for them for decades. But the world is changing, audiences are evolving, and even Disney has to adapt.
Right.
So how are they keeping their storytelling fresh and relevant for the 21st century?
One way they're evolving is by embracing diversity and inclusion in their stories.
Okay.
We're seeing more diverse characters, storylines that reflect different cultures and perspectives.
It's about time, right?
It is.
Everyone deserves to see themselves reflected in the stories they love.
They do.
It's not just about checking boxes either.
No.
It's about telling authentic and nuanced stories that resonate with a wider audience.
Absolutely. And Disney has a unique platform to reach millions of people around the world.
Right.
They can use their storytelling power to promote understanding, empathy, and positive social change.
It's like they have this incredible opportunity to not just entertain,
Right.
but also to educate and inspire,
Exactly.
to use their stories to spark conversations and challenge perspectives.
Exactly. We're already seeing them tackle complex themes like environmentalism, social justice,
Yeah.
and the importance of family and community in their films and TV shows.
So it's not just about escapism anymore. It's about using storytelling to reflect the world we live in
Right.
and to inspire us to make it a better place.
That's the power of storytelling.
Yeah.
It can connect with us on an emotional level and make us think about the world in new ways.
It can.
It can challenge our assumptions, open our hearts, and spark our imaginations.
So as Disney continues to navigate the challenges of the 21st century, what do you think is the most important thing for them to remember? What will be key to their success in the years to come?
I think the most important thing for Disney to remember is the power of their own legacy. They have this unique ability to touch people's lives through storytelling,
Right.
to inspire hope, to promote understanding,
Yeah.
and to create joy and wonder.
Yeah.
As long as they stay true to that core purpose, I believe they'll continue to thrive for generations to come.
That's beautifully said. It's a reminder that in a world obsessed with data and algorithms, it's the human connection that truly matters.
Yeah.
And Disney has a remarkable ability to forge those connections through the power of story.
Exactly. Stories have the power to transcend boundaries, bridge divides, and create shared experiences that bring us together.
Yeah.
And that's something worth celebrating.
So there you have it. We've taken a deep dive into the world of Disney, the financials, the strategic decisions, the challenges, and the enduring legacy of their storytelling.
We have.
It's been a fascinating journey.
It has, and we hope you've gained a deeper understanding of this complex and influential company.
Absolutely. And as always, we encourage you to continue exploring, to keep asking questions, and to keep discovering the stories that shape our world.
Because the world is full of stories waiting to be told, and Disney is just one chapter in that ever-unfolding narrative.
Well said. And on that note, we'll leave you to ponder the future of Disney and the power of storytelling. Until next time, keep diving deep.